Let's finally talk about NIO Stock, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove that fact. And today we're speaking about an EV stock that has gone on an absolutely insane run over the last month or so. So I've been getting asked to make a video on these guys for quite a while now, and I've been trying to make up where my head is at with this company. I am an investor. It is my second smallest EV position, sadly. I only have 80 shares. However, I am up well in excess of 150%. Sadly, I started investing in these guys when I had a lot less money to play around with. But look, it is what it is. I also have had concerns about investing in Chinese companies for a little while now, predominantly because of the US elections, and I wasn't sure how it was going to affect things. But it looks like it's affecting things well. So as I said, I kind of put this video off for a while because I was really making my mind up on where I stand. And now I know exactly where I stand. So we're obviously going to speak about the recent price action over the last couple of weeks in particular, because it truly has been immense. I want to speak about our October deliveries, which you are more than likely aware were absolutely fantastic, and our upcoming earnings. I want to speak a little bit about this, how the US election could impact the EV industry, particularly if Biden wins. Something that's always been important to me in regards to NIO is this surging on rumours of European expansion. How important do I think that is, and what part do I think this has played in our recent run-up? I want to speak about analysts, because there are some extraordinarily bullish analysts on NIO, which, if you're in the EV market, it's quite odd to find that, specifically outside of Tesla. It's hard to find, EV stocks that analysts are really bullish on. Then there's a few things I want to touch on towards the end, institutional ownership, the short percentage, etc. And then the last thing I want to do in today's video is go through this stock chart and show you some price points that I think we should be looking out for in the short term, over the next couple of months potentially. So a lot of work went into this one. Right before we get into the video, can I please ask you to hit that juicy like button, my friends? If you're new around here, please hit that juicy red subscribe button. We are less than 100 subscribers away from 50,000, which is absolutely insane. So please, if you are new around here, help your boy get there and hit that juicy button, my friends. And drop me a comment down below. I want to know where you stand on NIO, specifically in the short term, because again, I am an investor and I am very bullish in the long term. But whenever we see moves like this over the span of less than 2 weeks, we have to ask ourselves, what do we think is going to happen in the short term? So with that being said, let's get into it. Let's just start it off here. I'll make myself a little bit smaller as usual. NIO stock runs up to a record as October deliveries double. And Chinese EV stocks in general have been doing fantastic. Li Auto and XPeng as well. Now, I'm not involved in them. I don't do too much research into them, but I have seen them doing fantastically. XPeng up 23% yesterday. So shares of NIO Inc. surged to a record close Monday after the China-based EV maker reported October deliveries that doubled to a monthly record of more than 5,000 vehicles. Absolutely insane. It's absolutely perfect. They increased by 100.1% year over year. It's literally perfect. But that could actually be worries to some of the people who think that these Chinese companies are still, rigging their numbers. I think it just is a happy coincidence. NIO delivered 31,430 vehicles in 2020 total, increasing 111.4% year over year. And cumulative deliveries of the ES8, ES6 and EC6 as of the end of October reached 63,343. Boom! Beautiful, immense. NIO has been on a spree this year in general, and they deserve everything that they have created for themselves so far. I have to say that. It's been amazing to watch. Now is a good time to say that I am long on NIO. I definitely think this is a company I will hold for years and years and years, and I agree with a lot of what may seem to be absolutely crazy price targets being thrown around from a yearly point of view, but I do think there's a lot of volatility to come in the short term. We're going to get into that. Next thing is this: November 17, 2020, NIO is to report their third quarter 2020 results. So this is in just less than 2 weeks now, my friend. It's a Tuesday, November 17th. I think it's going to be exciting, and I think they're going to be absolutely fantastic results. But a lot of you will probably remember the last time NIO reported very good results was Q2, and we actually took a near 10% dip off of those results. Now, less than 2 weeks later, we went on this beautiful run to the upside. But yeah, it was a bit of a delayed reaction. It was quite odd. So just keep that in mind. I do expect them to be very good earnings, but I'm not sure exactly how the market is going to react, especially given the fact that we're going up so much. That's why when we get into the charts later, you'll see why I have certain numbers that I will be keeping a very close eye on. But I do think they're two of the first reasons we have seen this run up, or two reasons that have contributed to this run up at least. Fantastic October numbers. Q2 was amazing. We expect Q3 to be even better. The next thing is this: how the US election could impact the EV industry. Now look, I'm not getting involved in the politics of it all, but a lot of people do believe that if Joe Biden becomes president, it's going to be better for the EV market in general. And then on the flip side, we think if Trump is elected, it'll be better for the stock market and the economy in general. So it's kind of a catch-22. But I do believe that EVs are one of the industries that should prosper either way. Maybe not for the first week or two, there'll be a lot of volatility, but even in the medium and long term, even within a month, I think they'll be one of the best industries regardless. But with that being said, a lot of people seem to think that Biden is going to become the new president. Now, who knows? We know that Trump is saying all sorts of things. He's taking it to Senate, etc., etc. But this could again be part of the reason why, EV in particular has been going up, but even more so, Chinese EV has been going up. People do definitely believe that if Biden becomes president, they will perform better than if Trump becomes president. And, that's what the polls are showing as of this moment in time. So both candidates stated that they supported EVs. And I mean, recently, we saw the guys from Lordstown Motors at the White House with Trump himself. But Donald Trump did nothing good for EVs, while Joe Biden has proposed reforming and extending the EV tax credit, as well as building a vast EV charging network across the nation, which would also be good for, us SBE investors, ChargePoint. But it would be good for all EV manufacturers in general. It would make them more accessible to the general population. So it's believed in general that Biden's win would help speed up the adoption of EVs, both electric cars and electric trucks, and particularly those built by American automakers such as Tesla, Ford and Rivian. Let's throw Workhorse and Lordstown Motors in there as well. But I think also people think there will be less US-Chinese tension if Biden is to win as opposed to Trump. So Biden plans to spend $2 trillion on EV infrastructure as well as other green projects if he wins. But let's keep in mind, guys, a lot of people promise a lot of things. Every president ever, essentially. So this isn't even a guarantee. So this would include building over 500,000 charging stations by 2030 and restoring the full EV tax credit, which Trump reportedly killed. So I do think the fact that Biden has been winning as of thus far has been good for NIO Stock in particular, along with the broader EV market. Then there is this, NIO surging 7% from November 4th on rumours of European expansion. Now I don't think that's the sole reason for this move, but I do think it plays a part of the broader picture, and it's not something I see people speak about the whole time, and I do think it's going to be really, really important down the line. So unconfirmed media reports that China's electric vehicle company is now looking to expand into Europe have been coming out, but I mean, this is something we have expected and we have known about for a considerable period of time. But if we see more articles resurface like this, it could lead to some short-term pops. And right now I think that's what we're seeing. We're seeing a lot of, potential catalysts come together, which has created this huge short-term pop. So according to these reports, the company intends to launch its ES8 and ES6 models in Europe next year, with its first NIO House store set for Copenhagen, Denmark. That marks a change from previous reports, which has highlighted Norway as the company's first targeted destination. Now, who knows where it's going to be? I'm not really concerned where it's going to be, in all honesty, as long as they get to Europe and expand from there gradually over time. And guys, look at this, okay? It's a project dubbed Marco Polo. NIO is said to be aiming for sales of 7,000 electric vehicles in its first 2 years. I don't think this is going to be the most important thing in the next 5 years, or I do think it could be absolutely massive is 10 plus years down the line. I mean, 7,000 electric vehicles in 2 years, yeah, it's great, it's 7,000 vehicles, but look at what we did alone in October, 5,000 plus vehicles. It's not going to be the biggest thing in the world, but it's a step in the right direction, and I do think this is a long-term catalyst that people should remember when investing now. Especially when you look at some of the analyst price targets, this is something that needs to be kept in mind in my opinion. And that brings us nicely onto this page here. NIO rallies after bullish analyst comments. Citi raises price target from 32.20 to 46.40, citing significant tailwinds for the EV stock over the coming quarters. These price targets are generally 12-month price targets. So analyst Jeff Chung reiterated a positive view based on several factors, including a strong order backlog with high margin visibility. We now know that our margins are actually very good for NIO, which they weren't only a matter of 2 quarters ago. So the stock appears overbought from a technical standpoint, which means traders will be looking for some near-term consolidation, and that's something we're going to speak about in a few minutes. They also go on to speak about an increase in market share, battery cost reduction, and policy tailwinds related to exports, which is all very good, but it all does kind of stand for the large majority of EV companies as well. Maybe not exports, as not all of these EV companies are in China, but you get the drift. If we have a look at Yahoo Finance at some of the analyst price targets, there seems to be an average of about 2070, okay, and that is a very important number. However, we do see JP Morgan, for example, have upgraded them from neutral to overweight. Morgan Stanley, equal weight to overweight. UBS sell to neutral. There's been no bad analysts coming out, but a lot of them do have price targets considerably lower than where we are as of right now. But then if we actually go over the CNN, this is quite interesting, okay? So there's 17 analysts offering 12-month price forecasts. Look at these guys, lows of 44.12s, medians of 155.80, and highs of $310 a share in 12 months. I'm not sure why the CNN analysts are so different to the Yahoo Finance ones. That's why you should always, take everything you see here with a pinch of salt. Form your own opinions, but yeah, these numbers are crazy. I mean, the fact that the difference between the low and the median is over $110 is pretty much 300% is insane. So, you know, I don't really trust these numbers. I don't know why they are so high, but I think the Yahoo Finance ones can give us a better understanding. And then obviously go ahead and read some of the individual ones. As we spoke about this one where Citi raised its price target to 46.40, I think that's completely fair. So now I want to speak about the stock chart a little bit and a little bit about what I am seeing on here. So we had this big period of consolidation here, somewhere between 16.65 all the way up to 22.14. So that's a big range, but that's where we were trading between for a considerable period of time, okay? Then we had this gap up right here into this big green candlestick, okay? So there's a Fibonacci retracement to mark out pretty much exactly where the 0.5 is, and you'll see it actually falls right in line with these candlesticks here, which represent the bottom of this new uptrend. So I'm going to delete this now because we know why it was there. So there was a gap up right here, which is somewhat concerning to me, okay? Essentially, there was no price action in here. We went right from 21.68 all the way up to an open of 23.91 without anything happening in between, okay? And in general, when these gaps are formed, they eventually get filled. And obviously, as we can see, as of this moment in time, it has not been filled. Now look, gaps don't always get filled, but the large majority of the time they do. So essentially, somebody went ahead and fetched historical stock price data of the 30 Dow Jones industry components from Yahoo, dated all the way back from 1989 to 2013. And these are, you know, all around sound companies and their price of overall long-term uptrend. We can see that in general, gaps only don't get filled 8.8% of the time. So the large majority of the time, these gaps that are created get filled at some stage, okay? So that's why when you hear me speak about gaps, I do take them quite seriously, because a lot of the time they get filled. Now, not all of the time, or else it would be very easy to just short every stock that has a gap. But yeah, and what's also interesting is a couple of other points here. It is possible that some recent, within a year, gaps are not here long enough to get filled. So either that means they will get filled, you know, a long way down the line. Keep in mind, guys, most stocks crash 50, 60, 70% a couple of times within their lifespan. A couple of times probably within 20, 30 years. And on average, there are about 10 up gaps per stock per year. This was in the Dow Jones, my friends. So these do happen often, and the large majority of them, the fact of the matter is they get filled. So this to me is a very, very interesting price point. More so right around here, 22.50 all the way up to maybe, let's say 23.50. That's a price point I am personally watching. And if I actually bring you back to what the analysts were saying earlier on, they say traders should watch for near-term consolidation between levels of 36.67 and 39.80 over the coming sessions. If the stock breaks down, traders can see a move to retest trendline support at around $28 a share. So $28 a share is right around here. You can see there were quite a few hours where we traded somewhere between 26.50 and 28.50. I also did highlight this little area here. There is a tiny gap. You may not even want to count it, but it is something worth noting. This is where the first candle closed, and this is where the next candle opened. So although it only looks like, you know, a difference from 30.90 up to 32.84, it was actually from 30.50 all the way up to $34 essentially. So that was a massive gap. So I do think this is another price point that in the short term we should be watching out for, especially when we see this massive run up. It's worth, you know, not getting too excited. Now if we do zoom out way further, there's actually this very, very big gap back here, but this is all the way down at $8 to 10.36 a share. So I'm very much so hoping that this is one of those gaps that, you know, doesn't really need to be filled. This is one of, let's say, the 9%. Because simply put, guys, sometimes a company is just doing so well. Sometimes market sentiment shifts so hard. Sometimes so many catalysts and fundamentals about a company do change that gaps can be warranted. I did just want to show you guys this one just so that you're aware of it, but I don't think it's one to be concerned about. Maybe if we do ever come back down to these levels here, that is where we'll have to watch out for, but I don't think that's going to happen. But the reason I've spoken about this analyst in particular is because I agree a lot with what they have to say. I know their price target is 12 months. I think if we have a good Q3, I think if whatever president gets elected, people respond well to, especially EV investors respond well to. I think if NIO keeps doing good things, if they keep bringing out more deliveries every single month, this number here, 46.40, could be seen way sooner than 12 months. I'm speaking a matter of a couple of weeks. But I also think that if the broader market sentiment is to shift, you need to watch out for these price ranges here. I know it seems like a massive drop. It's all the way down to, let's even say, $22.50, $23. It's a possibility, guys. Look at the large majority of EV stocks. We've seen them all crash absolutely horribly. And if we just look at NIO Stock on the 1 year chart, let's remember a year ago they were $2.34 a share. Less than that. I mean, maybe 9 months ago, 8 months ago, they were a similar price. We've seen 25% dips happen here. We saw a 16% dip there. We've seen considerable dips happen off of the back of big up moves, but we've never seen a big up move like this. We haven't seen this 74% up move. Aside from here, I know this first initial pop was far more than that, but you know, since they've become a more established, more expensive, bigger market cap company, we haven't seen anything like this. So that's where I stand with this company right now. That's what I'm watching in the short term. I do want to stress the fact that in the long term, I'm still extremely bullish on the company. The reason I'm looking at those price points is because I want to buy a considerable amount more. As I said, when I initially invested in this company, I didn't have as much money to invest, and then I had to prioritize Workhorse and to an extent Lordstown Motors because I thought we had better short-term catalysts. Turns out I was wrong. I would have made more money in NIO in the short term at the very least. That's going to happen sometimes with investing, but I just wanted to let you guys know those numbers because I thought they were quite interesting. I don't think NIO is going down until market sentiment changes. Right now, the market's looking bullish again. Not just the EV market. I mean, the Nasdaq was up nearly 4% yesterday. That's insane, guys. We haven't seen a day like that in a long time. So until that changes, I don't think what NIO is doing has to change. And I think they can continue going up at a very fast rate, despite, I mean, going up 75% from literally the 13th of October. But anyway, my friends, thank you so much for watching today's video. I really do hope you enjoyed, and if you did watch the video all the way until the end, you, my friend, are a true legend. I really do appreciate you. If you did enjoy, took some value, some entertainment, please consider hitting that like button, and ultimately consider hitting that subscribe button because we are so close to that 50,000. And I'd love for you to drop me a comment down below, let me know what you think about NIO. But anyway, guys, that's it for today's video. Have a fantastic day, my friends. I'll see you for another video very soon. Peace.